Okay, we're going to look at 5-3, exercise 5-3.
This is page 233 of the 23rd edition. I put a snapshot of this on Canvas too, so you can open that up and take a peek at it there. I'm going to pull this away in a minute, and we won't be able to see it. But the best way to learn this, I think, is looking at transactions. So we're going to whip through these handful of transactions, and we are going to be a buyer of inventory for each of these transactions, right? So that's how we're going to go about it. Our very first one says what? We purchased 4,600 of merchandise from Lion with credit terms of 2/15N60, invoice dated April 2nd, and free on board shipping point. Now, there's just a ton of information there. We know that there's a discount involved, right? Because we know that we get a 2% discount if we pay within 15 days. Otherwise, we have to pay it within 60 days, right? The invoice is dated April 2nd, so that's the date we start counting that 15 days and the 60 days. Free on board shipping point means what? We, the buyer, are responsible for shipping because we own it as soon as it leaves the shipping point, right? So there's all kinds of stuff we'll do there. We'll look at booking it though, right? Even though there's all that information, booking the transaction is pretty straightforward. We bought inventory, right? So we debit merchandise inventory and credit accounts payable. We don't pay any attention to the discount. We're doing the gross method at this point, right? So we don't pay any attention to the discount. We just record that merchandise inventory and accounts payable. Let me get that a little better. There we go. Now, let's take a look at the 3rd of April. We paid $300 cash for shipping charges on the April 2nd purchase. Remember, this was free on board shipping point. We're responsible for paying freight. Here we are paying the freight. We know that that adds to the cost of our inventory, right? So I debit merchandise inventory and credit cash just to add that to the cost of our inventory, right? That's us paying the freight company to buy that $4,600 worth of merchandise inventory. So right now our merchandise inventory is sitting at what? $4,900, right? The 4th of April, return to Lion Company unacceptable merchandise that had an invoice price of $600. So now, of this $4,600 that we bought, right, we're saying, now $600 of it's no good, we're going to return it. Well, returning it's really easy, right? Because if this is how you buy it, you return it by just flipping it around, right? So the return is just going to be what? Accounts payable and merchandise inventory, right? Come on, focus. Accounts payable and merchandise inventory. Just the inverse of the entry that we did to buy that, right? So right now we know that what? We owe them $4,000 and we have $4,000 worth of inventory. Now, we owe them $4,000, right? The next transaction says 17th, we sent a check to Lion Company for the April 2nd purchase, net of the discount and the returned merchandise. So now we're going to pay for this, right? We owed them $4,600, but now we only owe them $4,000. But there's that discount, right? So I'm not even going to have to pay them the whole $4,000, right? But I know all of the accounts payable is going to go away. So I'm just going to show you the whole transaction and we'll talk about it. We know that the $4,000 we owe goes away. So I debit accounts payable for $4,000, right? We know that we're going to have to pay cash of some amount, so we credit cash, and we figure that out by taking what? The 4,600 minus 600, 4,000, times the discount, which is 100% minus the discount, so that's times 98%, right? So 4,000 and 39.20, we know after our transaction has to balance, so we don't have to credit something for $80. It's just a rule of accounting. And we credit merchandise inventory. Because I didn't have to pay $4,000 for that inventory, right? I only had to pay $3,920. So we T-account this merchandise inventory account. What happened at the very top? $4,600, right, from the 2nd, right? And then on the 4th, what happened? We reduced it by $600, right? So now we got a balance of $4,000. Now, here we pay for that inventory, right? We pay for that inventory, but I didn't have to pay $4,000 for it. I only paid how much? $39.20. So when I credit that $80 to merchandise inventory, this balance goes to what? $39.20, right? So that means that is the balance in my inventory account. That is the cash that I paid for that inventory. That is how we match that, right? Okay. 18th, purchased 8,500 of merchandise from Frist Corporation. Credit terms of 1/10/30. Invoice date April 18th. Free on board destination. So again, there's a discount, 1% discount this time in 10 days, net 30. And the seller pays the freight because it's free on board destination, right? But regardless, we're just still doing what? We're buying inventory, so it's merchandise inventory and accounts payable, right? Merchandise inventory and accounts payable for $8,500. Piece of cake, right? Now, the 21st. After negotiations, received from Frist a $500 allowance toward the $8,500 owed on the April 18th purchase. So apparently we didn't like something about this merchandise that we bought, so we called them up and we argued and they said, okay, here's $500 off, right? You don't have to pay $500. So what happens? Accounts payable goes down by $500 and that inventory goes down by $500 because it didn't cost us $8,500. It only cost us $8,000, right? And the very last transaction, we're going to pay this. We're going to pay this with a discount, right? So they sent the check to Frist paying for the April 18th purchase net of the allowance and discount. So we owe them $8,000, right? 8,500 minus 500. We owe them 8,000, but we're going to pay them something less than 8,000, right? We only have to pay them $79.20 because we got a what? A 1% discount, right? 8,000 times 1% is $80, right? That's where we get that $80. And all the accounts payable goes away. We only have to write the check for $79.20, right? So that is the process of buying inventory on account, dealing with returns, dealing with allowances, the little freight stuff in there that we had to talk about. So this is a fairly comprehensive example of buying merchandise inventory.